Let's do it. Jedi Options. Hey, I'm feeling in teacher mode here, so I'm pulling up a Word doc. We're going to talk about the old boomerang system, the boomerang strategy. I want to give you a 3-minute intro on the fundamentals of how it works, and then we're going to use GDX as an example. One of the ways that I love to introduce this concept of this boomerang is with the phrase that everybody says is the way you make money in trading, and that is buy low, sell high. Buy low, sell high. When you think about the concept of buy low, sell high, effectively what that means is I want to increase exposure at lower prices, and I want to decrease exposure at higher prices. Okay, the way you increase exposure at lower prices is you buy low. The way you decrease exposure at higher prices is you sell high. And this is much easier said than done because it's counterintuitive. In the stock market, when things go on sale, people run out of the store. They don't want to buy when things are down because usually there's a reason why things are down, and it scares them. And then when things are up, they don't want to sell because everything's great, right? And so part of the challenge we all have as human beings is to rewire the way we think. Because you're not predisposed to buy stocks after they go down and to sell them after they go up. You want to do the opposite. What I like about the boomerang is that it allows you to buy low, sell high. By nature, it gets you longer at lower prices and less long at higher prices. In short, it increases. Actually, this is not in short. It's a long way of saying it. But another way of saying it, it increases your exposure at lower prices. It decreases your exposure at higher prices. So the strategy, the idea here is you sell typically out of the money puts, right? Until you get assigned. And if you get assigned on an out of the money put, it's because the stock went down. Stock went down, it went low, and you use the put as your vehicle to get you more exposure. And now you're assigned and you get long shares, right? So then you're long shares, and the way to set yourself up to decrease exposure at higher prices to sell high is you then sell a covered call, right? So the boomerang, the visual here is kind of a back and forth thing. I throw the boomerang and it comes back to me, and it's kind of this cycle. It's a very good visual for the idea of selling puts, selling puts, selling puts. You get assigned, you're buying low, you sell calls, stock goes up, then you sell the stock, you're selling high. It's just a handy way to use options to accomplish the objective of buying low and selling high. Well, here's an example. We've gushed over what's going on in gold earlier in the show. You've got a nice little pullback in gold. You have a top in the dollar that's supportive of higher prices. And as a result, you're getting some nice price action in gold stocks. The one thing that I like this week about gold stocks is that they're front running gold. Gold has not bounced off support yet. GDX has. And so GDX is one of the areas that we spotlighted in our scouting reports coming into this week. We liked the pullback. And sure enough, it bounced. Now, if you want to jump in a time machine and go back and buy it on Monday, feel free. The reality is you probably missed the optimal entry point, but I still think it's bullish. And I still think that you could set yourself up to be a buyer at lower prices on GDX and a potential seller at higher prices. Well, you got to buy before you can sell. So the first step is setting ourselves up to be buyers at lower prices, which you do by selling a put. When you sell a put, you obligate yourself to buy the stock. So what I'm eyeing here is selling a put down around 25. I like the 25 area because you would have to completely retrace the entire breakout and follow through. You'd have to break the 9, break the 20, and at that point be at potentially below the 50. So you got a high probability. You got a high probability that this doesn't go below 25. But there's still enough premium in the 25 put to pay you a decent return on investment. So it's not so far out there that there's no payday. I also think that 25 is a decent entry point. If you have a longer term bullish bias and you kind of believe that this bottoming pattern is going to be maybe predictive of higher prices, or that you have stability in this area, you're not going to go much lower, then that makes 25 a decent entry point. It makes 25 a decent entry point. And so maybe it doesn't go down to 25, and I just collect the premium. Okay. I mean, I'm willing to buy low, but maybe you don't force me to buy low because it never goes down there. That's fine. I still get paid. So maybe we sell this put and it expires worthless, and then we'll sell another put. I just want to set myself up to be a buyer at lower prices. Okay. Because I like this longer term and I like the spot. That's step one. So if I come in here, I'll tell you right now, and we didn't bring this up earlier, but they are killing option premiums for December options. The market's looking ahead to Thanksgiving. The market's looking ahead to Christmas and the holiday hubbub, and the historical lack of volatility around there. And they're just saying, listen, we're not expecting much volatility. So you're seeing implied volatility just get decimated right now for December options. Point being, it's really hard to get enough juice in that December 16th monthly option. So we're going to have to go out another week or two to really get enough premium in selling GDX puts. I'm going to go to the December 23rd, 30-day. I'm going to look at the 25 strike, and I'm going to get about 32, 33 cents. Okay. It may not seem like a lot, but the margin requirement's only about $250. Well, if I make 32 bucks on 250, that's a 12 point, that's almost a 13% return by naked put standards. That's really good. That's really good. I'll make a 12.5% return on my money by being willing to buy GDX if it goes down to 25 by Christmas. Yeah, seems like a win-win to me. And if it did go down there and I bought it, I could then set myself up to sell high by then selling a covered call for January or something up towards maybe 26, 27, etc. Okay. Now I could go on and on, but that is a really good, I think, illustration of how you would take this boomerang concept, apply it to a good technical situation, good fundamental outlook right now, I think, too, for gold, given what the dollar's doing, and really capitalizing on where GDX is in its normal cycle. In again, me being willing to buy low there, down around 25.